Hello everyone, this is Randy Rodenhouse. It's 4:22 on Friday. Just wanted to show this trade setup that happened right at the last hour of the day. As everyone knows, the market took off at the last hour. And what we see here is the market's coming down. Let me pen out. It's coming down, coming down. Then it starts to chop around. But if you look at this here, you see that it came down to, I think it was 665, and then it retested it. When it retested the low, this low stochastic actually went up. So this is going up, and this is basically flat. And sometimes it'll go down, so that's basically a divergence. And then it just takes off to the upside. In fact, it closed at 688. I don't have the whole thing in the range here, so you can see it, but it went past this point here. It went way up to this is this is 682 here, but it went it closed at 688. So we had put a buy stop here. We took a piece of pie. We got stepped out around here, so took a little chunk out. But these markets are pretty violent, and did not think it was going to take off like that, but it did. But you can get these little indications from these divergences. This going up, this coming down. You'll see that quite a bit when you're trading. So just keep an eye out for that. For example, here's another one. See, it's going lower here. So from here to here, it's going lower, and then you can see this is going higher. So it's a good place to sell. And then it'll come down. Now, how long you hold it? I mean, I usually take profits on these things pretty quick, or bring the stop down pretty quick. So, but you'll see this throughout. And when you're trading, sometimes the setup doesn't work, but when it does, like this one took off, this one gave you a nice little profit here, and this is a great way to make some money scalping the markets. All right, that is for the E-mini. Alrighty, so let's continuing looking at the end. By the way, that last chart I was showing was not a daily chart. That chart was a 512 tick chart. So it smooths out the pattern. You can do 5-minute, 10-minute, 15-minute, 20-minute, 30-minute, and so on. I prefer to use the 512 tick chart on those. Actually, no, I'm sorry. That particular, the E-mini, I'm sorry. The E-mini was a 2000 tick chart. This is a daily of the yen. And the reason I pulled up the daily here because I wanted to show you. Today it opened probably about here. And then it came down, and the high here was 101. Actually, the high was 102.36. So it came down, opened up here, came down, broke this. That was a good place to be short, and closed nicely on the downside. So if you took this trade where when it opened up, and if it comes down past that point, or you can to be a safer spot, you'd probably do here, which was 102 even. So you could have sold at 102 even, still made 35 pips, or if you did it higher at the 102.36 area, could have made money either way. So this is a kind of a Larry Williams type setup. I don't know if you've heard of Larry Williams, but it's called the oops trade. If it opens above the prior day's high, you sell it at the prior day's high. Sometimes what I do is I sell it at the prior day's close, but sometimes you get burnt if you do it, sometimes you get burnt if you don't. So either way, in this particular case, you would have made money. So that was a good trade. The other one is the euro currency, I'm sorry, and it did the same thing. It opened up high above the prior day's high, which was 126.55. So it opened above 126.55, and then came down. It did come down, and then you could have got some real decent profits. Obviously, came down to roughly one 125.30 area. So wasn't a huge profit if you took it, but it did come back up at the end of the day. So it might have been a break even for you, because if this happens, opens higher, it breaks this high of the day before, you put a stop. Once it gets through there at least 20 ticks, then I would put a stop at break even, and that's what I did. So we basically broke even on that trade. Um, Hopefully everybody understands that trade. If you don't, you can email me at randy@tradethefuture.com, and I can explain it to you. Essentially what we're doing is, when these markets are, this market obviously is in a downtrend. If it opens higher, a lot of times when it comes back, it'll come right through the prior day's high, and that's what we did. In this case, it pulled back because we had the big rally in the stock market, and that drove the euro currency back up. So, at any rate, that's it for today. Have a great weekend, and we'll talk to you on Monday.